All right, my name's Trey. I've been in the credit space for several years now, and I wanted to put together a condensed video of what I've learned over the years. So if you're somebody that wants to build their credit, repair their credit, use their credit, this is a video for you. I've literally had members raise their credit score overnight by 100 plus points, and that could be you if you use this information properly, right? So my philosophy is that if you can do the basics better than everyone else, you will outperform everyone else. So you might have to watch this video a few times. You might have to watch it twice, 3 times, 10 times, how many ever times it takes. This video, this information can literally take you to the next level. So with that being said, I do want to get into it. And one thing I want to be very, very transparent about, there is not going to be any fancy edits. There's not going to be any AI. It's all raw, unedited footage catered to make you successful in the credit space. So with that being said, let's get into the lesson. All right, now we're getting into the fun stuff. Okay, so the first factor of credit is, if you haven't guessed it already, it's payment history. First factor of credit. So payment history is 35% of your score, and it's going to be the largest amount for your score, right? Out of 100%, obviously. So 35% of your score is a good chunk of change. And what dictates your payment history? I want you to think about it like this. It's going to be a relationship. Credit is a relationship. And a relationship equals trust, right? I would argue that any successful relationship is built off of trust. I'm not a relationship expert or anything like that. However, if you see people with successful relationships, they typically trust each other, right? So think of your credit as a trust factor. And the question is, would you lend yourself money, right? If you look at your credit report and you saw whatever it is on your credit report, just by a glance at it, would you lend you money? Most of you are probably like this GIF here. We've all seen this GIF, right? Probably going in the bushes. You're like, oh, I don't know about that one. Maybe not. But go back to this question. Would you lend you money, right? Are you a trustworthy person? Are you someone, if I pulled your credit report today, would I trust you with $10, $100, $1,000, whatever it is, right? So late payments will basically report at 30, 60, 90, and 120 days. Again, you don't want any late payments reporting to your report at all. Zero, none. Under no circumstance you should have this. And I'm going to stress this. Do not miss a payment, right? So it goes back to this. Are you a trustworthy person? Right? Late payments show that you're not a trustworthy person. So you want to eliminate those from your credit report. Here it's, I'm emphasizing again, under no circumstances is this okay. Okay? Pay your bills. If you guys are going to take on a bill, make sure you pay it. And that's kind of common sense. You don't need me to tell you that. So if you can't afford something, don't buy it. Just don't do it. Pay your bills. Make sure if you're going to go buy something, make sure you pay it off. Right? But life does happen. So what I recommend is that so you don't forget, there's a hack that you can do. And for whatever reason, most people don't do this. In my opinion, it's kind of common sense, but set up autopay. This is like the ultimate hack to not having a late payment. So if you go through your app, you can find the little feature that says set up autopay. Now, I would recommend to pay the full statement balance, basically pay the bill in full. However, I understand that maybe like you're in the process of like just trying to figure out and fix your credit, and there's all sorts of debts and everything's going crazy right now. Like that's okay. I understand that. In that case, if you can't pay off the full statement balance, what I would recommend is to set up for the minimum due. So essentially it'll just be a small portion. At least you're not missing the payments because again, this is 35% of your score. 35% of your score is the biggest factor. You do not want late payments reporting at all. So use that hack. And if you need to clean up your credit as far as payments, we're going to get into that a little bit later in the credit repair section. But I basically just want you guys to understand that payment history is one of the biggest things. and it's simple to do and it's simple not to do. So for whatever reason, if you're not paying your bills, today is the day to start, right? So again, set up auto pay, and I'll see you guys in the next lesson. Is on utilization. So utilization is one of the biggest factors of credit as well, next to payment history. And this is going to account for 30% of your score. 30%. All right, so that's still a really big factor. Those two are actually the biggest factors of credit: payment history and utilization, and you have total control over them. That's why I like them. So this is where most people fuck up, and utilization is very, very simple, but it's something that's not explained very well, in my opinion. I think, when you hear the information and you kind of go into Google search, it's not explained very well. So I'm going to try to clear things up for you. So again, this is where most people fuck up. But what's nice about it is that you have the total control and the ability to change your utilization ratio once you understand it. All right. So utilization is calculated by the amount of money borrowed divided by how much accessible credit you have. I'm going to read that again. It was kind of a mouthful. Calculated by the amount of money borrowed divided by how much accessible credit you have. So let me draw an example here. So let's say you have a $1,000 credit line, right? Bear with me here. I'm a little slow on the drawing. $1,000 credit line. And you use $900 out of 1,000. My drawing sucks, so bear with me here. $1,000. So in this example, you will basically say, okay, 900 divided by 1,000 is going to dictate your credit line. So that is what? A 90% utilization ratio. So 900 out of $1,000, divide 900 by 1,000. That's where I got this number. 90%. It's basic math, right? You want to keep that utilization ratio very, very, very low. So you want to keep it as close to 0% as possible. So obviously, instead of $900, you're going to have $0, right? So on the internet, you'll see a lot of information saying, oh, keep your utilization at 20%, 15%, under 30%. I think that's all bullshit, to be honest. I think the magic number is 0. And the reason why I'm going to explain that is because essentially what people say is like, oh, I want to use my credit, show the banks I'm using it, this and that. Like, I don't want to overextend, and whatever the excuse is. But essentially what you could do is you can pay off the balance every single month. And that's where this comes in, the statement date versus the due date, right? So I would say keep it under 0% for multiple reasons. So if you are, let's hypothetically say you have $1,000 limit, going back to this example, and you paid off that $1,000 before your statement hits. I'm going to dive into this in a second, but before your statement hits, and let's say your statement hits, then you will have a $0 balance paid, which will go back to the first lesson of payment history. So you're still technically paying $0. So that kills two birds. So now your utilization isn't shot and your payment history is 100%. So the two major differences between the statement date and the due date is that statement date will be utilization, U for utilization, and due date is payment history, PH. Right? So you need to know both dates, statement and due date. So statement date is when the utilization reports, and due date is when your payments are due. Right? So if you can work these two out, like let's say you put in your calendar and you understand that your statement date is like, let's say it's on the 20th and you have a balance on there, your $1,000 credit card, and you have a $900 balance on there. As long as you pay it before the 20th, it'll zero out. So if you pay it on the 19th, then it'll zero out as a $0 balance on the statement date, which is super good to know. Because if you do that now, you're reporting 0% balance, and your statement will report that, so that when your utilization is reported, it looks like you're not spending any money, but you still have that accessible line of credit. So I think it's really about positioning and just kind of understanding the different dates that are going on. And the reason why let me go back up here. The reason why I say most people fuck this up is that they're just paying at the wrong time. So I've had clients fix their credit overnight or within minutes just by switching the utilization day, right? So since they understood that their statement hits again, I'm gonna go back to the example on the 20th, and they just paid it on the 19th, you can get a credit score jump of like 150 points. It's like insane. So I would also argue that a utilization ratio has a higher impact than a late payment history. It's banks just don't want to see that you have a bunch of credit and then you're just using it all, and it's kind of scary because they don't know if they're going to pay you, if you're going to pay it back or anything like that. So I would just argue it's just about positioning and utilization. I think it's kind of just my I would have to say favorite factor of credit because you have 100% control over it as long as you understand these two things: statement date and due date, right? So that pretty much concludes this lesson on utilization. Again, I'm going to emphasize it. Study utilization because it's one of the ones that can actually make the greatest impact on your credit report. So this one is going to be about age of accounts. So age is about 15% of your credit score, and it's still a pretty big chunk of change, right? I would say so far we've talked about, depending what order you're watching this in. So far, we've talked about payment history, utilization, and now we're talking about age. Those are the three biggest components to the credit puzzle, right? So understanding those three, I think, will definitely increase your chances of increasing your score. So it's very simple. Age, how long have you been in the game? How long have you had credit? How long have you had access to credit? And you basically just want to show banks you've been in the game for a while. Let me turn this off. There you go. All right, so yeah, you basically just want to show banks that you've been in the game for a while, and it goes back to the payment history. Are you a trustworthy person, or have you been a trustworthy person for a really long time? The answer should be yes, right? But let's get into it. Age is calculated by the average of all your reporting accounts. So I don't want to overcomplicate this, but let's draw a simple example. So let's say you've had a credit card open for 10 years, right? And then you open one today at 0 years old because hasn't been a year yet. Your age is determined by the average. So if you do 10 plus 0, what does that equal? 10 for basic math. And then you'll divide it by 2 since there's two accounts. So 10 plus 0 divided by 2 because there's two accounts. So that equals 5. So your total age would be 5 years old. Simple, right? So again, you add every single credit account that you have together and then divide it by the amount of accounts that you have, and that's where you'll get your age. So age is a good range. Basically, a good range for age is to be about 3 to 5 years. If you're in the anywhere below or 3, that's kind of assumed to be a new credit, right? And you want to just show banks that you've been in the game for a long time. Again, the older it's been, the better it looks. But the good range to pretty much get approved for anything without having issues is about 3 to 5. Right, so you're going to want to aim for as much age as possible. So aim for 20 plus years. Very good quote. Shoot for the stars, land on the moon. Got the little moon emoji here. But yeah, aim for the stars. So you're going to want to maximize your age. But people start questioning, like, okay, how do I get 20 years of age if I just started my credit yesterday, right? And that is, I'll get to that in a second. But that's a great question. I'll jump into that in a little bit. But here is just a good example. When was the best time to plant a tree? 20 years ago. The next best time is now. So you want to start working on your credit as soon as possible. And the sooner you work on it, the longer it's going to be, the more open it's going to be. And going back to what I was saying about how do you get a bunch of age if you just opened your credit yesterday? You could basically time travel with what's called authorized users, or AUs for short, if you want to see the acronym. And I highly, highly encourage it. So I've been in the game for about 7 years, right? But I can increase my age by finding people to add me on as an authorized user. So what does that mean? If I become an authorized user, then they can add me onto their account and I'll adopt their history, their age. I'm going to go a little bit more in depth on authorized users in another module, but I just basically want to stress the importance of age, right? So again, you want to shoot for 20 plus years. You want to start planting the seeds now so that you can thrive later in the future with your credit profile. Today we are going to talk about inquiries. So inquiries are 10% of your entire credit profile. So it's not as big as the payments, it's not as big as the utilization or age, but it still does play a factor. So this lesson's not going to be too crazy in depth. It's pretty simple and straightforward. So let's jump into it. So there are two types of inquiries, hard and soft. So the major difference between a hard inquiry and a soft inquiry is a soft inquiry is not going to have a credit check at all. So it's not going to hurt your credit. So that's a misconception that if you check your credit, it's going to be impacted. No, that's a hard inquiry. So a simple way to put it is that if you are going to put in the last four of your social security number, it's going to be a soft, just kind of like a rule of thumb. But if you have to enter the full social security number, it's going to be a hard inquiry. So typically you want to refrain, from having too many hard inquiries on your profile. You can have unlimited soft inquiries, right? So those don't matter. So just keep the hard inquiries to a bare minimum when having your reports. So yeah, this is going back to my point. You want to avoid hard inquiries when possible. So you're going to be like this dog, completely bending over backwards. But typically they will account for negative 3 to 5 points on your credit profile. So if you get denied for credit, then it could probably impact it, but a little more, maybe minus 10, like minus 10 or something like that. Right. So you want to avoid hard inquiries when possible. It's unavoidable when you're applying for credit. So like, let's say you're getting a loan or if you're getting a credit card, whatever it is, and it's unavoidable. But if you are just kind of fishing for credit, try to avoid it. Go soft when you need it. So hard inquiries, kind of going back to my point, you're going to look like this meme here, right? Like you're just blindly going in, and it's kind of a red flag. So when a bank looks at your credit profile and you have like 20 hard inquiries, they're going to be like, what the hell does this person need 20 lines of credit for? Why? They're just scared that you're going to get a bunch of credit from them and then just leave the country or something, right? They don't know what you're going to do. So you just look like this person here, right? I don't know if you guys watch that movie, but it's whatever. But yeah, so you just want to go in blind. It raises a bunch of red flags, questions, and you just want to make sure you kind of minimize that. And it'll maximize your chances of getting approved for things when you don't look like you're in financial distress, right? Inquiries will remain on your credit report for 24 months and fall off your report automatically on the 25th. Fairly straightforward. You can remove them through the methods I'm going to teach you later. However, if you have a couple on there, don't worry too much about them, and they'll just fall off your report automatically. You want to space out your inquiries and keep them in the 3 to 5 range. I think I mentioned that on the age. For whatever reason, that's kind of like the magic number, is keep it in the 3 to 5 range. You don't want too many. And as far as inquiries, they can actually be different on different bureaus. So your TransUnion can have 3, maybe your Experian has 5, and your Equifax has 1, because different banks pull from different lenders. So that's another good thing to understand. Is it takes a quick Google search. You can go on there and say, hey, where does Chase pull from? Where does American Express pull from? They're all different, but you can actually use this to strategize when you're applying for things. And knowing what banks, where they pull from, can increase your chances of getting approval. Because if you know a bank will approve you from a TransUnion credit report, then you might want to maximize or minimize, I should say, your inquiries on there so you can maximize the results that you're going to get. So that is pretty much it for inquiries. Pretty straightforward. Again, just try to refrain from too many hard inquiries and use more soft inquiries if you're checking your credit report. Where am I? There we go. All right, so this one is on types. This lesson is going to be fairly straightforward and fairly simple. So this is the last of the factors of credit. So there's five main factors. We talked about payment history, utilization, age, inquiries, and now we are talking about types. So this accounts for 10% of your credit score, just like inquiries, but it's important shouldn't go unnoticed, right? It's still a pretty big chunk of the credit algo. So there are three types of credit. So there's revolving, which is basically credit cards. Installment, which are loans, could be student loans, personal, auto, mortgage. And then there's secured, which you can borrow up to a maximum, but you have to pay it back in full. We're mainly going to be focusing on revolving and installment. Those are the two easiest ones to add to your credit profile. So essentially what you want to do to have a good mixture in your credit profile is diversify the types of accounts. So you're going to have a few credit cards reporting. I recommend at least three on your credit report. You're going to look like, okay, I can manage a couple credit cards and have a bunch of balances here and there. And you just look a little bit more responsible with the credit. And you want a couple of installment loans. There's no actual hard number, but if, like, let's say you're trying to get approved for an auto loan or a mortgage, it looks good that you've had past loans that you can handle those things. So it kind of goes back to the trust factor. Again, credit is just like a relationship. So you just want to be able to show for something or having good street cred or whatever you want to call it, or good rapport with people, or you want people talking good about you generally, right? So that's a good life skill, life hack to have. And that's how the credit reports will look. So as long as you look trustworthy and you look like you can maintain a bunch of profiles and diversify your accounts, then the banks are more likely to give you money. So I want to give you a little bit of a outside the box hack here. So some people, for whatever reason, like to pay cash, and that's totally okay. I'm not against that. And that's going to go back to here, installment, because a lot of people, what they'll do is they'll pay things in cash, but don't want to have like an installment loan. And again, it goes back to what I was saying, whereas like a creditor will more likely give you a loan if you have some type of installment loan history. So like, let's say you want to, I don't know, like you want to get a loan on a new Mercedes, right? And you've never owned a car before. Why would the creditor trust you to have a Mercedes loan, right? So one way around this is basically doing what's called the 90% payoff hack. So for all my cash payers, again, there's nothing against paying cash, but I think there's just a smarter way to do it. Is that you basically, let's say you have a Mercedes, you want to pay 100K cash. You're big baller if you do, big G, right? So if you want to pay 100K cash, I would argue that it's a better strategic approach to actually pull out a 100K loan and then pay off 90% of it. So you're going to pay off 90K. Sorry, my drawings suck. You guys seen it in the past modules. Pay off. All right, forget it. You guys get the point, right? So you're going to pay off 90K of the loan, and then you're going to ride the rest of the 10K throughout the term of the loan. So maybe it's 8 years, right? Maybe you finance it for 8 years. You're just going to pay the monthly payment on an 8-year loan. And I would argue if you have 100K cash, you can probably pay a couple $100 on a loan, right? But what did you achieve by doing that is that now you have installment loan history. You have installment loan history. And if you actually ride this out for the 8 years, it can do much more for you because now you have 8 years of positive payment history. How many months is that? Let's take a little calculator real quick. So 8 times 12. So you have 96. I know it's reversed, but you have 96 positive payments reporting to your credit profile. Now you just upped your payment history. Banks look at you. You look like you're more trustworthy. And now if you want to pull out a, I don't know, 500K loan for like a Lamborghini or something, then you can go do that, right? You can go do that because now you look a little bit more trustworthy. So I would say the 90% payoff hack is a really good place to get installment loans. And this also works if, I know that was a pretty big example, but this also works if you're new to getting installment loans. So let's say you have 3 credit cards already, but you've never had a personal loan or an auto loan or a mortgage or anything. You can go to the bank and then ask them for like, hey, can I get a $500 loan and then just pay off $400 of it and then ride the loan out for the rest of the term. Right now it's reporting, you're going to look like it's an installment. You can ask for a bigger amount. Like now you're diversifying your credit profile. And then so every time you ask for credit, it looks like you know what you're doing. So that pretty much concludes this lesson. It's again, I kind of want to go back to this picture before we sign out here. So you got to start thinking outside the box. Credit is a game of looking at things in a different lighting, right? It makes it fun, right? So I would just say and encourage to start thinking outside the box. All right, I'll see you guys in the next one. Find this here. Okay, so the basics is what will get you the big success. I'm going to repeat that. The basics is what will give you the big success. So always revert back to the basics. I put the diagram here that for the factors of credit. Just going to give you a little bit of a run back. 35% is payment history, 30% is utilization, 15% is age, 10% is your types of accounts, and this is actually incorrect. These are reversed. Whoever put this picture here did not do it correct. But however, age is 15% and inquiries is 10%. So go back to the basics. And sorry for the confusion here. I probably should have picked a better diagram. But nonetheless, you get the point, right? So there are 2 options that you can do here for starting your credit, and that is going the secured route, which I'll jump into right now before the other method. Is a secured card is basically you're funding an account with your own cash, and it acts as a credit card. So the 3 main points, you're going to fund the account with cash, and then you're going to make payments to that account as if it was a credit card. So, it goes back to the payment history. And you're basically what you're going to do is you're going to show a bank that you can build trust with them over a period of time, which is typically about 6 months. Then you're going to ask for upgrade the card to an actual credit card. So this is one method that you can do for building trust relationships with banks, which is highly important. So a secured credit card is really safe to go. And the reason why it's a safe way to go is because there's no actual risk to the bank. So if, like hypothetically, let's say you pull out a credit card and you just nuke the credit and take off and go to another country, that's a risk to the bank. So a secure credit card is, since it's funded with your account, then, funded with your cash, then that means it's going to be 100% risk-free to them because it's your cash, right? So the second method is a student credit card. The student credit card and then the secured credit card. I know they're very similar, but student credit card is typically a very low credit line. 500 to 1,000 is typically what it is. Could be more, could be less. 500 is usually about the minimum. And now the only catch to a student credit card is you need to be a student. Right. So you might be wondering, hey, what if I'm not a student? Or you might not be a student right now. Easy fix. I think it's very easy hack, actually. You just enroll into a free online college course. Like I'll show you guys for sake of example. Stanford online credit. Not credit. Online course. There you go. Or your Stanford certificate. go Stanford Online. And look, you could just jump into any of these and then just start. Where is it? That's not the homepage. Yeah, you can jump into any of these. Look, you can go into any type of education, understand anything, and they'll give you a course syllabus and things like that. It's pretty straightforward, pretty easy. So just enroll on an online college course. And I mean, what's kind of nice about it too, you can go into any college you want and just learn anything you want, which is pretty cool. I don't think that's talked about very much. But essentially, all you're going to do is just show the banks and give them information saying, "Hey, look, I'm a student. Please sign me up for this credit card." Right? So I like memes, so it's a hack, right? So if you go to again want to build your credit from scratch. These are perfect ways to do it. Maybe you don't have a credit card, maybe you're new to credit, maybe you don't need to fix your credit. And this even works if you want to repair your credit. You go back to both of these hacks, right? There's secure card, student card. You could do both. I would encourage that. And essentially what the goal is at the end of the day is to build a relationship with the banks enough so that you can create a new credit account with them and then build a financial future with them, right? Getting bigger lines of credit, getting business accounts with them, or whatever it may be. So that pretty much concludes this lesson. It's fairly straightforward, fairly simple. I'll go a little bit more in depth down below in the text. But yeah, so secure card, student card, get to work. All right, so you made it to the end of this video. I want to stress the fact that you might need to watch this video a couple times for you to truly understand the concepts that were explained. But I also want you to understand that this is just the surface. So credit goes so much deeper. If you're in the 700 club, 800 club, you need to use your credit. Credit is useless unless you actually use it. You could travel for free in luxury. You could fly first class. You could stay in 5-star suites. You can scale a business with unlimited funding. The rabbit hole goes so much deeper. So if that's something that you're interested in learning, let's partner up. I can literally coach you on exactly how to do these things and use your credit to your maximum advantage. I'm going to link it somewhere in the description or somewhere down below where you can get access to my private community where we discuss these things and discuss different types of plays that you can use to enhance your lifestyle. So I want to thank you guys for watching and hope to see you inside.